CFO of listed entity jumps off building, potential petrol price decrease, massive recession, US super bubble, but the charts say otherwise. We're about to get into it, so let's get started. Good morning and welcome, guys. I am your host on this beautiful Monday, the 5th of September. Guys, this is the brand new premiere of our G360 TV. We have a ton of information to cover. We're going to have a ton of fun together, and it's just going to be something absolutely amazing. So over the next couple minutes, we are going to impart with you everything you need to know and so much more about the financial markets. There's a timeline down below, so this will keep track of all the information that we're about to cover. But guys, just absolutely welcome to something very, very special. All right, beautiful. So we're about to jump into it, and we're going to be starting off this morning with some news in terms of what's happening in the world, and we're going to be starting on the local front. So let's get into it. Beautiful. So first things first, in terms of local news, we don't have too much to talk about, but we do start the day on a positive note. There is a set or potential price decrease of petrol coming this Wednesday, just over 2 rand a litre. So not too much happening on the local front. We still have the issues of a certain particular farm. We still have Eskom issues. We certainly still have unemployment issues. But the headline, at least for the start of this week, does seem to be a little bit positive. The petrol issue has been a massive one, and so this is going to ease up that pain a little bit more. Now, moving on to international news, we're going to keep hearing about, the battle between Elon and Twitter. We're going to continue to hear about companies' earnings coming over the course of this particular month. However, this morning, there's an interesting article that I'd like to point out in terms of Bed Bath & Beyond. So Bed Bath & Beyond, for those of you who've been following Wall Street Bets, and I'll share the link down below in terms of Wall Street Bets, ultimately this has been pushed into the meme stock territory, right? The CFO of Bed Bath & Beyond has been reportedly believed to have jumped off a building, resulting to their death, right? And this brings up a very interesting conversation in terms of, what is happening in the world in terms of these meme stocks, right? Because Wall Street Bets essentially uncovered that this Bed Bath & Beyond stock was heavily shorted, right? So this is where they were trying to do a short cover and a short squeeze. So I will be doing a separate video on meme trading and just the whole Wall Street Bet saga and how it sort of unfolded. And, if you want to participate and jump in and have a look, I'm generally going through there once a day, and the sort of things you find are pretty interesting, to obviously say the least. All right, moving into European news and European data. We don't have all too much to say about this. There's not too many big items here. We do have quite a lot of items on the fundamental data front in terms of the European Central Bank meeting up this week. But the one big item is that the euro-dollar parity is now over, right? So for the first time ever, the dollar is actually stronger than the euro, right? And there's speculation that the pound is soon to follow. So let me know what you think about that down below. Now, first and foremost, before we go all too far, Guys, please remember to go ahead and follow us on all of our social media fronts, right? We have some really amazing things we're going to be releasing over the next couple days. There's going to be content, there's going to be snippets, there's going to be highlights. And so to really get the most out of your experience with us, we invite you to participate with us on social media. There's going to be some big changes to our site, big changes to our look and feel coming. And as the show evolves, so will all of our social media fronts. Okay, so it's time to jump into the fundamental data. So let's give it a quick look. Right now, I've summarized this week and we're just looking at the high impact news events, and we don't have too busy of a week this week, right? It's going to be fairly quiet. So in terms of today, we only really have composite PMI for the pound, and that may have some sort of effect, but really I think where things are going to be headed for the pound, I think is really going to be closer towards the interest rate decisions that will hit the euro and obviously have a little bit of a knock-on effect on the pound. Now, for those of you who've been following Papa Powell's speeches, you will know that he changed his tone quite a bit last week in terms of where the US economy is heading. He was generally taking a fairly soft approach. We call this a dovish approach in terms of we're going to let the data lead us, and we're going to increase interest rates, and we're going to slow down the economy in a controlled fashion. And the ultimate goal there is to obviously have some sort of soft landing, right? It's not meaning a full-blown recession. However, last week, Papa Powell changed that tone and basically said, there's going to be some pain coming, right? And it's better expressed, by this picture right here. And this goes by Biden asking, Powell, tell me in one word how the market's going. He says, good. Says, well, okay, I'll give me 2 words. He says, not good, right? That's ultimately a summary of where the tone is busy going. Now, we do have Powell speaking, and that's going to be on Thursday. These times all GMT +2, and that'll be at about 3:10. Now, we are going to be streaming this live together. So to give you guys all just an update, we are going to be having live sessions every single day for the New York Stock Exchange Open, right? Meaning as the New York Stock Exchange opens, we're going to look at assets, we're going to look at commodities, specifically indices, because that's where we see the biggest moves, and we're going to be able to be trading that live. So I will be live with you here today. The same way you see me right now is how we'll be live, and I invite you to come and engage, give me your thoughts and opinions. You can pop in requests and we will analyze, and if I see trades that are worth taking and that they line up, we will then end up taking those trades, and you can obviously observe and understand what is busy going on. So that's going to be some very cool stuff, and I'm super excited for that coming up a little bit later. Now, in terms of the rest of the week, it's then fairly quiet. So Thursday, I think, is going to be the biggest day from a fundamental perspective in terms of just what external influences could really swing the market. But really with the week being this quiet, you can pretty much prepare for just about anything. So that is obviously what we are going to observe and make sure that we are well aware of. Now, moving up next, guys, we are going to move into analysis, and this is where we have a little bit of time together to go over the different instruments and obviously have a look at what is busy cooking in the market. So without further ado, let's jump straight in, and we're going to start off with FX. So we're going to start off with Forex, and we're going to start our very first analysis. Okay, beautiful. So guys, we're going to jump straight into the dollar index and have a look at what the US dollar is doing. And that's going to better help us understand, what we can expect from the rest of these FX pairs. So first and foremost, let's give it a quick look. So the dollar index has been on this massive bull run, right? Now, even with interest rate increases, even with all the things happening, the dollar has been doing extremely well. Now, I just want to point out here that we do have some sort of market structure, and there was a point in time we had this divergence, and it definitely showed that, listen, it could potentially break. Now, I will be doing a separate piece and will be part of a brand new 360 Traders Academy, what divergence is hidden versus normal or common divergence. And what I just want to point out here is that we are in this bull run, in this bull season, but if we look a little bit closer and we start to just dive into a little bit more of the details, we can see that we're making newer highs, but we aren't making newer highs on the RSI. So this potentially shows us that either A, we're going to break out, right, and the dollar index is going to continue performing to the top side, or we could see some sort of surprise move where, you know, the dollar index starts falling. Now, that would just mean that, you know, all other pairs are going to be correlated, and something like USD ZAR, as an example, in that particular case, would start to fall. So we are going to look at that, and we're going to jump into USD ZAR right now and right here. Okay. Beautiful. So let's give it a quick look. And this is quite an interesting one. I'm going to spend a little bit more time on the FX side, and we're going to spend a little bit less time on commodities. And we will be expanding on this program and all these different assets. But speaking about them from the start, we're obviously just going to cover them afresh. So the story of USD ZAR is obviously a known one, right? USD ZAR keeps going up, meaning the South African Rand keeps losing steam and power to the dollar. Now, for those of you who have been following me for a while, you'll know that I spoke about a couple of weeks ago this potential move off of the 50 Fibonacci level. Again, Fibonacci will be covered in our brand new academy, so stay tuned for that. But ultimately, what you need to know is that, you know, we have these pullbacks and these corrections to known Fibonacci levels, which are basically percentages that price retraces to and that price respects. So giving a look at just where we are at this particular moment in time, and I'm now looking at the daily time frame, you can see that USD ZAR had a pullback, and this was towards the middle of August, bounced off that 50 level, hit the 61.8, and sort of bounced off of it a bit, but now has pushed through that 61.8. Now we do have a 78.6 north, and that's just above us. And I do think with the current dollar's trajectory, the Rand is still going to continue going topside. The Rand is still going to continue losing steam to the dollar. However, we could start to see some sort of smaller pullback to that 61.8. If we do see a pullback to the 61.8, the ultimate zone to buy USD ZAR at this moment in time would be that if USD ZAR ranges and then comes back closer to our market structure, so that we have two levels support, a diagonal market structure as well as a known support / resistance being that 61.8. So that would be the ideal buyer zone. At this moment in time, there's too much risk down below and too much risk above to short or buy. So this we're going to continue to monitor, and I believe we're going to see a perfect storm on USD ZAR. Now, moving into Euro USD really quickly. I just want to point out the bigger trend that we're obviously seeing here. And again, we're going to have a look at that euro dollar parity that has been broken for the first time pretty much since 2002. So for the first time in 20 years, the dollar is now worth more than the euro, right? We saw that 1-to-1 ratio not too long ago, and we're busy breaking it. So what does this mean? And where's euro dollar going to go? So all signs right now in terms of momentum are pointing towards the dollar gaining strength. However, if we look at what Powell's busy saying, and we have a look at what are the items, you know, are busy being discussed, it doesn't look like, you know, that is the case. We keep hearing about recession, we keep hearing about super bubbles, we keep hearing about all these things, and how can the dollar just continue? And this is the beauty of price action, where, you know, all of those are opinions, all of that's data, all of that's, you know, external influence items. And we trade what the price is telling us. We trade price action, right? And that's my preferred method of looking at the markets. Otherwise, you have too much information, right? And you get into that analysis paralysis. So just looking at the price action, what is the price action telling us? Well, if we look at a 4-hour time frame, in terms of this, we can very clearly see going from a weekly to that 4-hour that we definitely at some sort of support, right? We definitely at this moment in time at and reaching some sort of diagonal support, but we still have some way down to go. So looking at it on a more isolated time frame, and we're going over to an hour now, we can start to see that we were ranging towards the end of August, but we've broken out of that range and we are making a impression towards a new low. So Euro USD definitely has the momentum towards the downside. We can see we broke that market structure. We had a structure at some point that looked very similar to this. And we can see we retested that, went through it temporarily, but ultimately we failed. And the dollar's making some serious gains against the euro. So the dollar's extremely strong this morning. And I think this is all going to lead up into Thursday as to what Powell is going to say. Now, in terms of the future of Euro USD, I think we are going to wait for some sort of pullback here. And then ultimately, once that pullback happens and we know where that next level of resistance is going to be, we might start to see some sort of diagonal market structure. So for me, I would be looking for a short position on Euro USD once that retracement has happened, and then we can continue down to the short side. Now, I am running over time here, and that's just because we're explaining things in a bit more detail and just doing a general recap on these assets, on these commodities. So moving into indices, and we're going to jump into US 30 now. And this is probably a favorite for a lot of traders, Dow Jones, US 30, just because of how it moves, its volatility, so on and so forth. Now, if you're a trader with Globex 360, which I absolutely hope you are, because you're going to get access to the live broadcast, you're going to get access to so many other things, you will know that US 30 in Globex's asset class is geared 1-to-1, meaning on other brokers, you will see that Euro USD, if you open a 0.01, every time it moves, you have a certain pip count. Now, at this moment in time, we have a 1-to-1 ratio, meaning that on another broker, if you open a 0.01, that is equivalent on our side to a 0.1 lots trade, so 1.00. So if you open a 0.10 on our side, that's equivalent to opening 0.001 on any other broker. So our accounts give you that flexibility of both opening micro trades as well as standard trades on the same asset class being an indice. So it allows for cheaper margin requirements, so on and so forth. So just little side notes of something that I really love. But moving along, we can see that Euro USD has been in this massive pullback. So the first 6 months of this year, we've seen a massive pullback on US 30. And we're now in this season where we have broken out, but we again in another pullback. And this is what is leading people in the markets to say, it's over. There's a massive recession coming. There's a bubble. But the price action says something otherwise. And I want to show you this for a second, right? So if we just isolate this little bit of the chart and we just look at that pullback, and we measure the last move that happened, we can clearly see we broke out, right? By all metrics, we broke out of that little bear market. Now, this move to the downside, if we have a look at it and we just maybe go down to a daily, alternatively a 4-hour, might give us a bit more detail. And we just measure, we remove this guy over here, and we just measure what that pullback looks like, right? Because we can clearly see that was a move there and we're getting that pullback. If you have a look at where we are at this moment in time, we're sitting on that 61.8. We're sitting on that golden ratio. And that's what we look for, right, as traders. That 61.8 is a golden number. It's a golden percentage in terms of retracements. And a very interesting subject, again, will be included in our Traders Academy. But ultimately, this is what a lot of people call the fingerprint of God, imparts it into everything, and it happens in markets too. So I generally get fairly excited when I see markets adhering to some of these Fibonacci levels, and we can clearly see how markets have adhered. Now, what are we looking for? So in terms of this market structure, we have a very clear definition of what it looks like, right? And we can approximate it to be in that area or that zone over there, right? We're going to snip that off. That might have been just an overextension or retest. But what we're looking for now is not to just buy it off the 61.8. What we would love to see, what would be a clear trade, a clear winner for me, would be breaking out of this channel and getting over that 50 fib level, right? And that would represent $31,957 for one Dow Jones share there. So a breakout here would be what I'm looking for, and that would be then a massive rally, a massive extension towards the top side. Adversely, if we see a breakdown below that 61.8, that could trigger a further sell-off down to that 78.6. And if we have a look back in time in terms of where that 78.6 sits, we can very clearly see that that also corresponds with our very next level of support. And this story continues across US German 30, it continues across NASDAQ. So the stories on all of the indices, the main indices at least, are very, very similar. So we're going to be in for a very, very interesting week, if not a very, very interesting quarter. Now, moving on into gold, in terms of what's busy happening in the world on the commodities front, and I will be including Brent as well. I know there's many of you out there who love Brent, but we're going to be starting off with gold because it really sets the tone for the commodities space. Gold has obviously been losing a ton of steam, and that's fairly obvious because of the strength of the dollar. Now, again, the price action says one thing, and markets and economists and Federal Reserve chairs are obviously saying something completely different. And so, which side do you take? Ultimately, no matter what's being said from a speculative position, we have to look at price. We can't predict what these guys are saying and when it's going to happen. We ultimately allow price to lead the way. So looking at the price of gold, we can clearly see that we're at a massive support right now. We've got a really good market structure. We've pulled back down to support, and where we're sitting right now, we can also see that we're starting to build out a little bit of a new market structure. It's not perfect. It's a little bit wonky here. Let's just try and map it out. So it's by no means a perfect market structure, but there's definitely something there that we obviously need to pay a little bit more attention to. And so I think the price of gold is going to be something very closely watched by traders. And what we're looking for is a sign of weakness in terms of this move, this last little leg here. I'm looking at an hourly time frame. So in the next 24 hours, we should see some sort of weakness in gold to continue that move to the downside. Now, at the moment, the correlation seems to be broken, right? If you guys remember, we always used to have this beautiful correlation between the price of gold and the strength of the dollar, where if the dollar went up in strength, gold went down. That's just the nature of the pair, right? So gold is being priced in against the dollar per ounce of gold. That correlation is broken, right? So just because the dollar is getting stronger doesn't mean gold can also get stronger, right? It's about who's getting the strongest, right, in terms of that. So we are going to be looking at the price of gold as well, keeping a very, very close eye on that as we move into this next leg. Whether that next leg be a leg down or a breakout, we're going to be prepared for both. And this is going to be the beauty of our live trading sessions, because that will be focusing on what trades are available today and looking and taking those trades, which I hope you are very excited for, because I'm super excited to get back into live trading with every single one of you. Now, Bitcoin is going to be its own series. I'm going to be making a complete video on the crypto space, right? So I'm going to be taking you through, what is blockchain technology? What are these different crypto technologies and the different alterations and versions, the versions of the blockchain that have made all these variances of different coins? And what does that future look like? What are the leading coins? What are the lagging coins? And what can we expect? There's some beautiful price action on Bitcoin down to the T, and I think it deserves its own segment to really expand on that. For those of you who are crypto traders, we are making a massive attempt to bring crypto into the weekend trading space so that we can trade crypto 24/7. And I do think this is going to become a massive focus for us in the future. So this is something we're going to be paying a lot more attention to. And let me know down below, what are your favorite assets or instruments to trade that you would like me to include not only in the pre-recorded shows, but that you would like to discuss in a live environment? You can let me know down below. As always, make sure that you obviously jump in, follow us on social media. There's going to be a bunch of new things happening, a bunch of new content that you can follow us and engage on. But most importantly, let me know down below in the comments what it is you think. How do you like the new show? And what would you like to see included to make your trading journey that much better? Guys, that's all for me this morning. I will see everybody live at 3:30 this afternoon, GMT +2. And until then, shalom.